Hey, C traders, Richard. Thought I'd just make you a quick video on some of the things that I'm doing with Goldbach time. It's not like it's a little. It came from AJ as far as the thought process, um, but I'm not doing anywhere near what he's doing. So keep that in mind. All right. So this is today's price action. This is actually this afternoon. Um, this is in about the 2 o'clock hour of Eastern Standard Time. And the reason I'm bringing this up is that I'm going to use this as a good example for a couple of things. All right, one is to show you the go back time the way I would do it. The other one is showing you how I would enter on this and the reason why I would enter here. And, you know, a couple other things maybe I'll show you. But the first thing, let's talk about the go back time. Okay, so we know that these are the numbers that are Goldbach that AJ uses. These right up here. Okay, and what I started doing was I started looking at this market in 90-minute cycles. Okay, because we know about accumulation, manipulation, and distribution, but there's it's price or the market's fractal, so you can break it down into smaller chunks, smaller chunks, smaller chunks. And so I'm looking at the 90-minute cycles, and this is just an indicator by right here, 90-minute cycle plus MTF handles hand. All right, and let's just look at this 90-minute segment. Okay, so inside of this is the manipulation phase of the overall market of the PM session. However, within the manipulation phase, there's an accumulation, manipulation, and distribution. And I say all that because I'm only interested in go back time in the manipulation time space of any of these 90-minute cycles. Okay, uh, because if you were to try to take all the different combinations of adding, the time plus the minutes of each hour of the day for each minute of the day, you have like hundreds of numbers, man. I put it in Chat GPT and told me to figure it all out, and it came up with like 100 different numbers. And I can't trade. I got to simplify things. I can't be trying to look at all these different numbers all the time. So I said, how can I simplify it? And I started looking at it from accumulation, manipulation, and distribution. And again, concentrating on the manipulation phase. So how do I divide this 90-minute segment up? I use what's out of Hoppy's book, um, time fib settings. And that's simply, let me show it to you. It is 0.38, 0.62, 0.81. Okay. So the very first section is accumulation, then manipulation, then uh, distribution one and distribution two. All right. So I'm going to take off the 90-minute cycles just so it cleans up the chart a little bit. So now that you just see the fib time settings and the green is manipulation. All right. Sometimes manipulation will come a minute or two before the zone or a minute or two after, or it could happen on this side of the manipulation zone. But in this particular instance, it happened quite a bit into the zone. Okay, so I'm only looking in these areas. Okay, so the reason why, and I took this trade today, and I'll show you why here in a minute. But when I looked at this, and I don't think you can see my time down here, so just pay attention to my to what I'm saying. So this candle, this lower candle right here, this is at 2:10 p.m. So that could be 10, or it could be 2 minus 10, which is 8, or it could be 2 plus 10, which is 12. All right, well, that 12 is one away from 11, 10 is one away from 11, and 8's too far away, but it's one away from 7. And then if you go one candle back, that's 209. So uh, 9's not, but 2 minus 9 is 7. That's a go back number. 2 plus 9 is 11. That's a go back number. So you kind of have a cluster right here. Okay. Now, the only other thing that I would be paying attention to is that when you're looking at manipulation and the go back numbers, it needs to be going into some sort of place to a PD array where there's existing orders. That's all liquidity is just simply existing orders. All right. Now, I thought this was going to be it, but I didn't have anything lining up to the left that made sense. Okay. The other thing is I kept watching it because I was going to see if it was going to break structure, and it never did. But here it actually did, but not in the way that you did. I used to trade it this way, where it's like I had to break this structure right there. I'm going to get rid of these cycles now, okay? Or these, excuse me. these fib settings, just clean up the chart. That's normally where I would have tried to get in, and then again, this is 2 plus 22. That would be 24, which is 1 off of 23, or 20, which is so. But that would be a fib setting right there. I mean, a Goldbach number right there. All right, and it was going into a block. All right. However, I got in earlier than that. All right, all because of where this was here. Let me show you why. Another reason why. So if I go here, I'm going to change this to a 15-minute. We were coming into this area right here, to this block. Okay, that's at 2 o'clock. That candle, and that's right where we were right here. Okay, so now I've got price going into an area that I know should have some orders, or at least there's going to be some resistance, and it's also in a cluster of Goldbach numbers. Right, so now I've got some, and it's also in the manipulation phase of the 90-minute cycle. Now the reason why I tell you I got in a little bit earlier, I don't know if you do this or not, but as the price is fractal, instead of waiting for it to break all the way up here, a closed candle all the way up here, and then waiting for it to retrace, I wanted to see if I could get in earlier. So what I do is I'm not actually drawing this on my chart, but I'm paying attention to it. So we have a low, high, low, high, low, high, low, high, low, high, low, high. I'll stop it right there. Okay, so let me move this out so you can see it. And as you can see, we had a market structure shift right here. All right, and at this point, I'm getting in here, and I mean, I go market long as soon as that thing closes above it. So I got in somewhere around here, took a little bit of heat. I could have waited, maybe tried to tap in the bottom side of this, but in the past, I might have been waiting for a fair value gap, but I've just learned that once it breaks structure, the way on this way, just go, and I have this confluence of Goldbach numbers, I go ahead and get in. All right, and because if it would have came back down in here, I would have been out immediately. Like if it came back down below this area here, this candle, which is this point right here. Okay, so that's just a little bit of tidbit of how I trade it. Now on this particular trade, I was trying to hold it till it broke this, and it didn't. It just came in here and mitigated this order block, and I got out somewhere. I think right in here, because I was hoping that it wasn't going to keep going down lower, but as you can see, it broke it, and then it broke it. Then it closed below it here, and I was like, below these, and I was like, crap. I don't remember where I got out, but it was a nice little trade. It wasn't. It was. I mean, it was nice. So, especially for the end of the day. So anyway, so that's kind of the way I'm using Goldbach. Now you had mentioned that you wanted an indicator to do this for you, and you can. Okay, so on this AMD PO3, just go down to GB time, general switch. Make sure all these are selected. Click it, and ta-da! It starts giving you all of these numbers. Okay, but what I would do is I'm gonna go back and turn on the 90-minute cycles. Okay, and then I'm gonna put on the fibs, and I would be paying attention to the ones that happen in the manipulation zone. Now you could have been trading accumulation and distribution, but I find it better to wait for the manipulation zone, and the reason for it is, and this is kind of getting off the topic of what you wanted to talk about, but I'll just say it real quick. When we think about ICT, it stands for Inner Circle Trader. Well, the inner circle that he's talking about is the manipulation phase, and that's why the 2024 model was it runs liquidity, breaks structure, comes back, it goes in either to a fair value gap or a breaker block. Or my problem with that is that I never knew like, well, which way is it going to go, and sometimes my risk was so big that it was a cluster for me. So, but I've just started concentrating on the manipulation area of each cycle. Okay, so we can look at this one right here. Let's go one more minute. Okay. So at this point, I'm looking at where's where's price being. Okay, so was it manipulated here? Well, it did run, but it didn't break structure. Okay, here nothing, here nothing, but here we did break and manipulate right here. But did we break structure? You know, and if you start going um, the way I was telling you to do it earlier, one way that you could see it quicker than most people is that you're here, you're here, you're here, uh, here. Let's see, here, 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 oh here, and here, here, and here, here, here. All right, up. That's not actually a pivot right there. Okay, so we broke structure right here. All right, which is right here. Okay. So another thing is that when you look at it from a Goldbach situation, we're right on the high on this particular setting. And so we were coming back into this partition. We were making an order block. So at this point, I started feeling pretty good. I did take a trade in here. I didn't get all of this. Uh, so one more thing I want to share with you, and then I'm gonna let you go. And then if you ever want to get on a Zoom call like this and talk live, or if you ever want to just do it during market hours and watch the market together, I'd be more than willing to do that. I love to do that. I love talking with traders, and I'm gonna remove everything. And I've done it numerous times with people. Okay, so I don't know if you've been following anybody that uses standard deviations, but what you want to do is you want to pay attention to the market structure. Okay, so we got here, we got here, here, and then we eventually broke structure down here. Okay, you think did this count? It didn't for me because it never closed below, but it closed below right here. Okay, so let's get rid of this line. All right. So with standard deviation, what you want to do is you want to take the last leg that was actually violated. Okay. So you want to go from here down to here, and I've got my fib settings that's for standard deviations. If you ever want to know more about it, there's a bunch of videos on YouTube about it. All right. So what the ideal is that once it breaks market structure, it's going to come back into this zone in here, and eventually, it came all the way back up into here. But where's it going to go? It's either going to go to 2.5, or it's going to go to 3.5 to 4. As you can see, it came down here and tagged 4. Just, perfect. All right. This is where I got interested in going the opposite way. So we're clearly in a downtrend. Why would I be wanting to get in way down here to go up? We're clearly in a downtrend. And the reason why is because I knew that this price had already been objective. It had been run a little bit. It was in the manipulation area of the 90-minute cycle. And it also broke structure. So I had all those things going. Plus it was hitting a 15-minute breaker block. All of those things together made me feel confident to go up here. The only thing I did wrong was holding out for here, and so I lost a little bit. I lost about 10 or 15 points right here on this trade. But that's not that bad. I mean, anytime you walk away with some money in your pocket, that's a good thing. So anyway, man, I hope you find this helpful. I don't know if I addressed everything that you wanted to, but again, If you ever want to get on a call, all you got to do is hit me up, man. I'll send you a Zoom link and we can, share some ideas with each other and then even trade live together if you want to. And all of this, I don't charge anything for it. I think that we should be helping each other, not trying to make money off of each other. I mean, there's so many people trying to make money on this stuff, man, and more power to them. But, if all the people that I know that are good, that are like they have good like following and big channels and everything, they're making way more money off of that than they are trading. So that, I'm like, well, because if I can just sit at home and trade, I'm not going to be making the YouTube videos. And just so you know, this is not my full-time job. I did used to trade full-time, um, but I didn't make a living at it. Not the kind of money I wanted to make. So I am back working, but I still do trade every day, every morning, usually, and sometimes in the afternoon. All right. So, man, let me know what you want to do. We'll get together. Thanks.